Advanced Financial Accounting PowerPoint presentation. In this presentation, we will discuss periodic reporting requirements for publicly traded companies. Get ready to account with Advanced Financial Accounting. Periodic reporting requirements. Companies that have more than 10 million in assets and whose securities are held by over 500 persons must file annual and other periodic reports to provide updates on their economic activities. So remember the general rule here. We're talking about publicly traded companies. They have a benefit of being able to be publicly traded to the public on exchanges. And in exchange for that, we want to see some more basically transparency. And therefore, you've got the filing process that needed to take place. We see some regulation by the SEC that we talked about in prior presentations. And then going forward, we want to keep and maintain the transparency, the information, so that there's both the investors and the companies have the information necessary in order to enter into agreements. And therefore, we're going to need some continuing reporting. What's going to be the requirements in terms of the continuing reporting? So once again, companies that have more than 10 million in assets and whose securities are held by over 500 persons must file annual and other periodic reports to provide updates on their economic activities. And that's going to increase that transparency so that investors know what is happening and they can invest with full information to do so. 3 basic periodic reporting forms used for this updating are Form 10K, Form 10Q, and Form 8K. Let's start with the Form 10K. Form 10K is the annual filing to the SEC, the Security and Exchange Commission. So remember, the Security and Exchange Commission is the federal body basically regulating this information. So the Form 10K is the annual filing to the SEC. Large accredited filers are companies having at least 700 million in aggregated market value. Form 10K must be filed within 60 days after the end of the company's fiscal year. So we're talking about fiscal year, end of the fiscal year. If it's a 12/31 year end, for example, they have 60 days in which to file the Form 10K after that 12/31 deadline. Companies having at least 75 million and less than 700 million in aggregate market value are accredited filers. Accredited filers need to file Form 10K within 75 days after the end of the company's fiscal year. And then small businesses that do not meet the requirements for an accredited filer have until 90 days after the end of the fiscal year. Obviously, it's a big process for a large company to put this information together. So this is a time-consuming process to be filling out the 10K, and some time is needed after the close of the year. So Form 10K parts include Part 1. Part 1 has a description of the business. Then we have Part 2, which is really going to be like kind of the meat of this thing, has most of the information within it. It's going to include the management discussion and analysis, audited financial statements and footnotes. So they have to be audited financial statements and footnotes. So we're going to have to put that process in place. And again, the audit, obviously is a time-consuming process as well. Report by management on the internal control structure and assessment of the effectiveness of them. So we have this reporting, this emphasis on the internal controls now, especially for these large companies, and attempt to have more basically transparency and be able to validate the financial statements, be more secure about the financial statements given the fact that we can rely on the controls. Then we got the auditor's opinion. So we got the auditor's opinion and at least 5 years of condensed financial information disclosures. Part 3 is going to be the information about the officers and directors, executive compensation, and the audit fees. And then Part 4 is going to be additional schedules and exhibits. Next, we have Form 10Q, which is going to be the quarterly report to the SEC. So notice you're going to say yearly. You got the financial statements for the year on the 10K. And now you can say, well, it'd be nice if we had a little bit more information, a little bit more transparency. Can you give us an update on a quarterly basis? And that's going to be now, of course, the 10Q. Note that as we do this, as we add the more information, there is a debate and an argument just like you would have within a company in terms of what's the benefit versus the cost-benefit analysis here. So as we get more information, more transparency from the company, it does take time for them to put this together. And so whenever we have regulations increasing and decreasing the requirements on the company, there's that kind of give and take. Obviously, we want the transparency because that's going to give faith to people to invest. And that's one of the major reasons why U.S. companies do quite well, because obviously people have more faith, and therefore, even if there's not as much of a growth potential, they're willing to put money in. And part of that is driven by the fact that there is more transparency given by the requirements that we have to have the reporting requirements. However, there could be a point, there is a point, whatever that point is, where more reporting, too much reporting can become burdensome to the point where the benefit doesn't outweigh the costs. And obviously, there's always questions in terms of how much reporting is needed. But, we got the annual reports and then we got the quarterly reports. This is going to be the quarterly, the Form 10Q. So quarterly report to the SEC. Large filers and accelerated filers need to file a Form 10Q. Must file within 40 days after the end of each of their first 3 quarters. So notice the 10Q is going to be filed after the end of the first 3 quarters, because the 4th quarter, then you're going to have the yearly report, which is going to be the 10K. Other companies need to file within 45 days after the end of each of their first 3 quarters. Form 10Q is not filed for the 4th quarter because the Form 10K will be filed after the end of the 4th quarter. So we got the quarterly form, which is like the 10Q, but it's only there for 3 of the 4 quarters, because on the 4th quarter, you're doing the 10K, which basically is going to summarize the information on the annual basis and should give it enough information at that point. So Form 10Q contains 2 parts. Part 1 has comparative financial statements prepared in accordance with ASC 270 and ASC 740. Part 2 will provide an update on significant issues occurring since the last quarter. Then we have the Form 8K. Form 8K used to disclose unscheduled material events. So unscheduled material events, Form 8K, must be filed within 4 business days of the occurrence of a triggering event. So we got, a triggering event, unscheduled material event, and has an effect to people possibly that would be using the financial statements, including investors, and therefore needs to be reported using Form 10K. Schedule 13D must be filed by those who acquire a beneficial ownership of more than 5% of a class of registered equity securities. Must be filed within 10 days after such the acquisition. And beneficial ownership, what is that? To directly or indirectly have the power to vote the shares or investment power to sell the security. So let's go through that one more time. We got the Schedule 10D, must be filed by those who acquire a beneficial ownership of more than 5% of a class of registered equity securities. So now you're saying this is important. This is going to be something that wants to be known, because now there's some influence. There's going to be somewhat of a significant influence, and therefore that's something that should be a reportable item. Must be filed within 10 days after such acquisition. Beneficial ownership, to directly or indirectly have the power to vote the shares or investment power to sell the securities, because now you have influence over what's going to happen basically into the future. Therefore, it might be something that should be known then to people and decision makers and whatnot, regulators and whatnot. So proxy statement, materials submitted to shareholders for votes on corporate matters. So once again, proxy statement, materials submitted to shareholders for votes on corporate matters. Voting on these matters often takes place at the annual meeting. It can also happen at special meetings, however. Accountant's legal liability and periodic reporting. So what's going to be the accountant's legal liability here? The 1934 Securities Exchange Act gives a limited level of legal exposure from involvement in the preparation and filing of periodic reports. For filing materially false or misleading statements, civil liability is imposed. The major defense for accountants to combat any lawsuits brought under the 1934 Act is due diligence defense. So, in other words, if there was some liability that was brought to the accountant, then how would the accountant defend for that? They would be arguing typically that they did the due diligence in order to prepare the reports. EDGAR, Electronic Data Gathering Analysis and Retrieval System, EDGAR, EDGAR. Electronic filing system developed by the Securities and Exchange Commission, the SEC. Firms electronically file directly by using computers. This will facilitate the data transfer and make public data available more quickly. The efficiency and fairness of the securities market is increased through expediting the reporting, accepting, dissemination, and analysis of time-sensitive data filed with it.